Well, thanks for joining us today. Happy Thursday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, I am joined by Brian Hoops of Midwest Market Solutions here this morning. And well, we're going to take a look at what may affect the markets here today. Brian, thanks for joining us. Other than, well, we had that BSE news that came out of Brazil overnight, and we'll get to that in the next segment. We'll kind of save that for that. The grain trade was more or less pretty quiet in the overnight session. There wasn't much going on. We have that Ag Outlook Forum going on in Arlington, Virginia this week that's put on by USDA. And I did hear where they're projecting maybe a little higher wheat acreage than what we had a year ago. Don't know if that was too unexpected, but did you get any other new information out of that this morning?
Yeah, they released that information at 6 o'clock Central Time, 7 on the DC time on the East Coast. So, it's factored into the market already, and really no big surprises. These are baseline projections, and they mean exactly kind of what it implies. This is the early stages of what the USDA is going to use for trendline yields for corn, and that's back up into that 182 range. We were it's 72.5 this last year, so yields certainly down from a year ago. But the USDA expects to see big increases in not only production for corn, but also increased acres planted for corn. And so when you combine those two numbers, you get kind of a sense that they expect prices are going to move lower, with ending stocks approaching 1.9 billion once again compared to the 1.26 billion that we're currently dealing with. So they have exports increasing by 200 million. They have feed usage increasing by almost 300 million, which is kind of a head scratcher. Because we're so tight on cattle supplies and really not seeing a big expansion of the herds anytime soon. But, the overall takeaway is they do expect production to increase once again for corn. For soybeans, yields should be up a little bit. They also expect that the acreage numbers will be up for soybeans. And then they have big increases for wheat, over 3 million extra acres being planted, yields over 49.5 bushels per acre, which is probably optimistic given how dry it is out in the Western belt. So, we certainly expect that we'll see very minimal reaction out of this report. We just don't think that there's enough here to give us any type of a momentum swing one way or the other.
Okay, well, let's take a look at our overnight trade here. Not much going on. As we referred to, the March corn just a half cent higher this morning at 674.5. Doesn't seem to really have too much influence from the Ag Outlook Forum. December is unchanged at 592. Wow, that's well off of our highs here from a couple of days ago. Now, in the soybean trade, in the overnight session, March ended up unchanged at 1539.5, so kind of fell asleep there. The July contract was down 1 1/4 penny this morning. New crop November soybeans, well, they wrapped up that session 4 1/4 lower at 1391.25. In the wheat in Chicago, overnight, we had March 1 3/4 penny higher at 738.25. July was up 1 3/4 cents. Of course, remember that wheat had been pretty weak earlier this week. Now, in Kansas City, we had March down 3 1/2 at 872.5. They seem to still be readjusting the spreads between Chicago and Kansas City. And spring wheat trade, Minneapolis, we had March up 3/4 this morning at 915. Meanwhile, on the cotton market, well, we had the March up 81 points at 83.06. December up 81. We'll come back and talk with Brian Hoops about that big story coming out of Brazil overnight and the setup for today's livestock trade. We'll be right back. Well, let's recap where we finished yesterday, because that could be very important in today's livestock trade. On live cattle, with our quotes provided by Bar Chart, we closed mixed yesterday with the April contract 2 cents lower at 165.07. Now, beyond that, everything was about 22 to 25 cents higher when we finished up. Then you get to the feeder cattle trade, and, well, when we headed home yesterday, April feeders were 95 cents higher at 191.75, and May was up 75 cents at 195.62. The biggest gain was actually August, up $1.25 yesterday. Now, in the lean hog trade, we had the April finishing $2.55 lower at 86.55, as they took back the majority of what it had gained the day before. May was down $1.42. All right, let's go back to Brian Hoops and chat a little bit about the setup on the cattle market today. So it was posted by Reuters in a newswire story overnight that the BSE case in Brazil was confirmed. And so that sets into effect all kinds of conditions in trade agreements between Brazil and China, to where Brazil cannot export beef to China anymore, at least for a while, until that is rectified. And it turns out that Brazil is by far China's biggest exporter of beef to that country. We are only, maybe about a fifth of the amount that Brazil sells to China. What do we do now?
Yeah, this news that's coming out is certainly not bearish to U.S. prices whatsoever. When we had the first BSE case, I think that was back in 2003. Prices were down, limit down like 10 days in a row. It was a real bearish development.
Mm-hmm.
And since that time, we've kind of been able to isolate any other cases that we've seen in Canada or places in the U.S. But now that we have it in Brazil and the case is confined there, as you mentioned, China is halting any imports of beef out of Brazil, and so they're going to be looking to some other country to supply that needs. It may not end up being the United States, but it certainly opens that door, or that window of opportunity for the U.S. to increase its exports to China and possibly to other Asian countries surrounding China, South Korea, maybe Taiwan, that has been buying U.S. beef products and also buying products out of Brazil. They may follow China's lead here and ban any exports, and that opens that door even further. So I certainly don't see this as being bearish for U.S. Prices on its face value. We have a lot of bullish already fundamental information, and tomorrow we'll probably see another bullish fundamental aspect with the cattle on feed report that comes out, and we're still waiting for that cash trade to develop, and it's probably going to be at higher money this week.
Oh boy, could be an exciting day. Well, thank you, Brian, for talking with us. Appreciate that, and buckle up. Today could be a bumpy ride. Appreciate it. Brian Hoops of Midwest Market Solutions.